Hey everyone, and welcome back to the channel where we demystify the markets and shine a light on hard-to-borrow stocks. Today, we're diving deep into a fascinating name that recently hit our screener, LABT Biotherapeutics Inc., trading under the ticker LABT. This isn't just about numbers, it's about understanding the unique dynamics at play for this specific biotech company. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's start with the basics of LABT. LABT Biotherapeutics Inc. is a clinical stage biotechnology company operating in the healthcare/biotechnology sector. They're focused on developing antimicrobial products specifically from their novel bisphosphocin class designed to combat a broad range of infections. With a microcap market capitalization currently sitting at just $4 million, LABT is a small player in a high-stakes industry. Show company logo/stock chart. What is cost to borrow and why it matters? So, what exactly does hard to borrow mean, and why should you care about the cost to borrow, or CTB? When investors want to short a stock, they first need to borrow shares from existing shareholders, typically through their broker. They then sell those borrowed shares, hoping to buy them back later at a lower price and pocket the difference. But borrowing shares isn't free. Just like you pay interest on a loan, short sellers pay a fee to borrow shares. This is the cost to borrow. When a stock is hard to borrow, it means there's high demand from short sellers or a limited supply of shares available to lend, pushing that borrowing fee sky high. And for LABT, this fee is exceptionally high. Why this stock is hard to borrow right now? That absolutely popped up on our screener because of its eye-watering cost to borrow fee. We're seeing an annualized CTB fee of 753.7% for LABT. To put that in perspective, that means short sellers are potentially paying more than 7 times the stock's value per year just to hold their short position. This isn't just high, it's extreme. When we look at the estimated float, that's the number of shares readily available for trading, LABT has a relatively small 1.8 million shares. A small float can make it easier for high demand to dramatically impact borrowing availability and cost. While the exact number of shares currently available to borrow is unknown right now, that 753.7% CTB tells us that borrowing LABT stock is incredibly expensive. Our internal composite squeeze score, which factors in things like CTB, borrow supply, float, and momentum, gives LABT a score of 41.9 out of 100. This score indicates significant underlying pressure due to the high borrow costs, even without immediate price momentum. Squeeze mechanics explained. This brings us to the core concept, a short squeeze. Imagine short sellers are paying 753.7% to borrow LABT shares. Every day, that clock is ticking and their costs are mounting. If positive news comes out, or if the stock price starts to tick up for any reason, those short sellers can feel immense pressure. They might stop buying back shares to close their short positions and stop the bleeding. This buying creates demand, which pushes the price even higher, forcing more short sellers to buy back, creating a cascading effect. That's a short squeeze, short sellers rushing to cover their positions, inadvertently fueling a rapid price increase. However, it's crucial to understand that a high CTB does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the price will eventually fall, and they are willing to pay a premium to maintain their bearish bet. Dilution risk check. One of the biggest concerns for any potential short squeeze play, especially in microcap biotech stocks, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. While this can raise capital for the company, it typically lowers the price per share and can completely negate any short squeeze thesis, even with high cost to borrow. For LABT, we found no recent dilutive SEC filings like SMINUS-1, SMINUS-3, or 424B in the last 90 days. This is a positive for any squeeze thesis, as new shares aren't immediately flooding the market to offset potential upward price movement. Recent reverse split watch. Now, let's talk about something critical for LABT, a recent reverse stock split. LABT executed a 1-4-10 reverse stock split on June 22, 2026, which was just 55 days ago. What does a reverse split do? It consolidates existing shares into fewer high-priced shares. So, if you own 10 shares at $1 each after a 1-4-10 split, you'd own 1 share at $10. Reverse splits reduce the float and reset the share price higher. Historically, we've observed that many microcap stocks tend to see renewed volatility or even a price pop within about a month or so after a reverse split. While LABT's split was 55 days ago, putting it slightly outside that typical 1-month window, it's still a recent event that drastically altered its share structure and float, and it's a pattern worth noting, though it is a pattern, not a guarantee of future action. Let's pause quickly for that essential reminder. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, with this incredibly high CTB of 753.7% and a small 1.8 million share float, what has LABT's price been doing? Well, today, LABT is down minus 2.58%. Over the last 5 days, it's done minus 3.40%, and looking at the last 30 days, the stock has declined minus 17.15%. Show price chart with decline. What's interesting, though, is the volume. Today's volume was only 105,400 shares, which is dramatically lower than its 30-day average volume of 2,921,713 shares. This translates to Xerox average relative volume. This low volume, despite the extreme CTB, suggests that there isn't much buying or selling pressure currently, which means short sellers aren't being actively squeezed yet. For LABT, given it's a biotech company, potential catalysts could be news regarding its clinical trials for its bisphosphocin class of antimicrobial agents, positive data releases, or new partnerships. Any significant positive development could ignite the low volume, potentially catching short sellers off guard with their high costs. In summary, Liquid Index Biotherapeutics LABT is a fascinating case study with a jaw-dropping 753.7% annualized cost to borrow fee, a small 1.8 million share float, and no recent dilutive filings to muddy the waters. The recent 1/4-10 reverse split 55 days ago has reset the share structure, a dynamic that has historically preceded volatility in some microcaps. While current volume is low and the stock has been trending down, the astronomical cost for short sellers is a constant pressure point. This is definitely one to keep an eye on if you're interested in the mechanics of hard-to-borrow stocks and potential squeeze plays. What are your thoughts on LABT? Have you seen other biotechs with such high CTB? Let us know in the comments below. Don't forget to like this video, subscribe for more deep dives into hard-to-borrow stocks, and hit that notification bell so you don't miss our next analysis. Thanks for watching and happy learning.